B of A Securities, meanwhile, coming out with a new note today on the auto industry. Even though the sector finished 2024 strong, the new year is bringing renewed uncertainty with headwinds from tariffs. And joining me now is the author of that note, John Murphy, Managing Director of B of A at Securities. John, it is good to see you. Want to dive into this note, John, specifically Tesla, because you made some moves there, John. You told your clients you were cutting your target. I believe it was to 380. How come, John? Just walk us through that decision.
Sure. Josh, thanks for having me. There are a number of reasons. I mean, first is we've seen sales really fall pretty significantly in international markets for Tesla, both in Europe and in China, January and February. So there's some extreme pressure there on volumes. The U.S. you're actually doing fairly well. Second, we haven't seen any real significant news or prototypes on the low-cost model supposed to launch in the first half of this year. So it's getting a little bit long in the tooth, and we're expecting there might be some real delays there, and I think that'll be a bit of a disappointment. Third, Elon's polarization out there with some of his comments has certainly made some people fearful of the stock, but also of the brand itself. We think that's probably a bit overblown, but certainly out there. Fourth, I think as you look at this, these new model launches are really the kinds of catalysts that you need to get sort of the software side of this going on the robotaxi side, or FSD and robotaxi. So you need to get the hardware out there to really implement the software. And I think that's something that people are concerned about is the hardware's not out there, and actually you might even see some delays on the FSD side. So I think there's those four things. The reality is the Model Y is going through a major changeover. All of its global plants will be down in the first quarter of this year for 3 to 5 weeks. So there might be a conflation of these model delays as well as some of the souring of sentiment towards Elon as pressure on the brand. So we think we got to keep an eye on this. There might be a recovery as we get through first quarter. The first quarter is going to be pretty tough.
John, let me also ask about tariffs, certainly front and center for investors today. Walk me through possible ramifications, ripple effects for Tesla there.
Well, I mean, Tesla, like everybody's got an integrated supply chain here in North America. So as you see 25% tariffs on products coming from Mexico and Canada, they're going to suffer the same kind of pressure as most other folks. When we look at this, there's about, and this is in aggregate, there's about $100 billion of vehicles and $100 billion of parts coming across the border. So it's about a $50 billion pressure at 25% on profits at the automaker level, which will result to probably in higher prices. For Tesla specifically, I think a lot of the electronic components, particularly wiring harnesses that are coming out of Mexico, where they'll run into similar issues as other automakers and probably need to raise prices. But it's a pressure point for all automakers, and we're likely to see increases in pricing really across the board on average of about $3,300 per vehicle in the U.S. So it's a big pressure point, something that's probably not sustainable for the auto industry, and we'll see volumes come down quite dramatically.
Pricing going up that way, John, in your opinion, is the American consumer in a position to withstand that?
Well, with confidence low, and sort of a lot of volatility we're seeing in the markets and the sort of the consumer sentiment numbers, they're probably not in a position to stomach that. And I think what we're going to be looking at is something that's a COVID supply shock 2.0, right? I mean, the automakers will be producing a lot less of their low-end vehicles and producing a lot more of their high-end vehicles where they can absorb some of these costs and potentially raise price. So no, the consumer is not really in a position to drive that, to absorb that. What we will see is just a richening of mix and potentially lower volume. That'll be not necessarily great for the automakers either, but it's going to be a real pressure point. No, the consumer's not in a great shape to handle that.
John, one other point you mentioned, I find it interesting, I want to double click on it, is whether this idea of whether Musk himself is actually impacting fundamentals. And I know he's obviously dove headlong into politics. He's practically living, it seems like, at Mar-a-Lago at this point. And some love him, others not so much. But is there actually any evidence that we have, John, any good data that we can say that Musk is impacting the fundamentals of Tesla here?
Nothing more than anecdotal stories at the moment. So I would say the pressure that we're seeing on volumes here in the near term have a lot more to do with the changeover of the Model Y than any sort of souring of sentiment towards Tesla because of Elon's actions and comments at the moment. I think what remains to be seen in the second quarter as the volume comes back up, how much of an impact we'll actually see from potentially a souring of consumer sentiment towards Tesla.
John, always great to see you. Always appreciate your take. Thanks for joining us.
Thanks, Josh.